Good evening, everyone. Welcome to the second of the monthly Westferry video updates, and this will cover performance in July and touch on a few things that have happened so far in August. Um, if I can just touch on, first of all, I'll just share the screen of the monthly report. So you'll see that the report, which went out last week, showed a reasonably good end to the financial year, up 2.2% for June, and led to a one-year return, assuming reinvested distributions of 7.4%, which underperformed the indices. Basically, our result with BSA back in February, which some of you might recall, pretty much accounts on its own for the difference between our performance and the indices. And that was achieved despite really having limited help, if any, from our largest listed position Connection and our indeed some detriment from AFL throughout the year. Both of those positions are ones that I hope will contribute to the year coming up. The unit price of $1.05. Just a reminder that that is a June 30 price, and that's not an ex-dividend price. The fund went ex-dividend on the 1st of July. I will be calculating the distribution this month, or at least an estimate of the distribution, which is usually very close. And from the 1st of August, from the 31st of July, I'll be publishing an ex distribution price. The actual distribution will be paid or reinvested, depending on your preference, usually around October. The delay is just because we need to get some paperwork through from some of the trusts and other funds that we're invested in. On that basis, we've actually got two investors that have indicated that they'll be putting further funds in July. I've indicated previously that July, August tends to be a good period to invest compared to sort of April, May, June, at least, on the basis that investing ex distribution means you're not immediately saddled with a potentially taxable distribution. So for those wanting to indicate any desire to invest further money now, that would be processed on the 1st of August at the extra distribution price on 31 July. So we've got about $600,000 coming in through that process. And combined with what I'll speak about shortly in relation to one of our positions, that will see us with a fairly healthy cash balance. So just touching on July, a reminder also with this session, you're welcome to butt in with by unmuting and speak directly, or you can use the Q&A function or the chat function at the top. I'll try and monitor both as we go. So last month we did really well last month out of Kip McGrath Education. So that's a position we took about 4 or 5 months ago and gradually built up into a reasonably substantial position for us. It's one where it was a deep value play because the metrics were reasonably cheap even on their face. But there are two aspects that attracted us to it more than that. Firstly, there was a real disconnect between the published results and the actual underlying cash generated by the business. And this is something I often look for when I'm analyzing a company, and you basically get it by looking at the accounting treatment of depreciation and amortization and compare that to what is the actual ongoing capital expense that the company needs to incur. And so often you'll find a company that's overvalued because of this, because they're failing to properly depreciate the ongoing capital requirements for that business, and they're capitalizing big amounts that really should be considered an expenditure. In the case of Kit McGrath, it was the opposite because what had been happening is in previous years, a large amount had been spent trying to set up a business in the US, unsuccessfully under the previous CEO, who's actually the son of the founder. So the founder, obviously Kit McGrath himself, the son Storm McGrath, he had great desires to set up a US business, which was ultimately hit by COVID. Potentially, whether that was the issue or it was never a goer in the first place, it's not clear. But a lot of capex went into that business. The decision was taken. We expected the decision. It's now been taken. We expected the decision when we invested that that would be wound down sharply or jettisoned without any further capital expenditure. But for the last couple of halves, the capex on that business has been depreciated or amortized in the accounts quite sharply, and so it artificially reduces the headline net profit before tax. But when you look at the actual ongoing capex, the actual cash capex for the Australia, UK, South Africa, Middle East business, which is performing really well, the capex is actually significantly lower than it has been historically, both because of the US aspect and because even those other areas had undergone a large ramp up in technological upgrades in previous years, which didn't need to be continually maintained. So there was this big disconnect between the headline profit and the actual free cash flow being generated by the business. Secondly, look, we weren't all that impressed by Storm McGrath. Thanks, and me riding on the coattails very much of two other funds, DMX and a few others. They had gone somewhat activist in this stock, and they'd installed a director who is well known to us in the sort of microcap world, Damien Banks, who's an incredibly capable and appropriately brutal when he needs to be guy. And he got into that company and swept out some dead wood without wanting to be unkind, and has really transformed it in a way that I think it had not been a particularly investor-friendly company, and now I would say it is. There's a really good insight into where that company's going and a great deal of trust with how management's dealing with it. Why didn't we take an even bigger position? Partly because it's fairly illiquid and it took a while to even build up the position we did have. Secondly, there is the big question around AI with this company. I've basically tried to set up our portfolio so that we're not particularly vulnerable to AI. A lot of hard bricks and mortar stuff that isn't necessarily going to be hit by AI, but clearly this is a business. Private tutoring for school educated kids is one that could benefit from AI in one way. There's great efficiencies to be gained, but can also potentially hit it. Will parents prefer AI generated tutoring services and this kind of thing? I think there's good reasons to say they won't. I won't go into that at the moment. But that was one aspect as to why we didn't really bet the farm on this one. But look, it did work out because during the month of June, Damien updated the market and confirmed. Damien updated the market and confirmed that the US business would be closed down, that the profit, EBITDA for FY25 was very solid, and the market liked that, and we got a good kick from that. So I just want to talk a bit about that particular stock to give you a bit of an understanding as to what we sometimes look for, looking for some sort of inefficiency, some aspect where we think we have a better knowledge than the market, and in that case it paid off. So I just want to move to another document, and this is one I have posted, and it was requested last meeting. And if I'll share my screen now with it. And if you go to the Westferry website, um, in the news and updates section, you'll see I've posted this document only a couple of hours ago, and it's a holding of all of our, sorry, a list of all of our holdings that constitute at least 1% of the fund. So you'll see there's about, I think, 29 positions there, makes up 85% of all of our holdings. There's a tail of other small positions that makes up the other 15%. But this is everything. So obviously, in my monthly report, I report on our top 8 listed positions, but this includes a breakdown of all of our unlisted and listed positions and investments in funds and property trusts that where that position is at least $200,000, so 1%. So just some comments on that. Look, download it, have a look at it through your own time. I've provided websites to each of the entities there for you to look at yourself. I'm happy to answer questions one-on-one in relation to this because some of this information will be new. But just some commentary. So first of all, you'll see the second largest position there, Nebulor. So in my monthly report, I've actually treated that Nebulor as cash in that pie graph I send out. But it's actually not cash yet. It's due to be paid to us in August, and in fact, the cash amount owing to us is slightly more than that, 9.3%. If it comes in without any disputes, and there's none on the horizon so far, then that should amount to about an 11.5% position, in fact. So that will potentially provide a bit of a boost in August, but that will be cash, and you'll see otherwise, not including that, we've been running quite a low cash position of 1.8%. You'll see there, that's our actual cash position, but I've been running that particularly low because I do expect that inflow in August from Nebulor, plus the further $600,000 we already have committed in further investments in July. So on that basis, we'll end up in a very healthy cash position. All of that cash will be used to reinvest in listed positions. So I'm continually from a peak of unlisted probably 6 months ago, moving back more towards a liquid listed focus. But that said, our unlisted positions that we do have, after a lot of experimenting and some failures, the ones we do have are going very well at the moment. So Allmain, you'll see, is our top position, and that's actually the debt we've provided to Allmain. So you see Allmain's number 1 and also number 6 on the group. The equity is number 6. So we own half of Allmain, but we lent it around $2.3 million at one stage at its peak in order to acquire a competitor, engage in some industry consolidation. I've confirmed, based on my estimate at the moment, that the entity of which we own 50% made about $980,000 in EBIT last year. It paid around $220,000 in interest, all to us under that top debt position, and it's basically that $980,000 has been tax free because it's been able to use previous tax losses, and that $980,000 has basically gone back into paying us. So we've been paid back around $500,000 in debt repayments. Some has gone into a larger working capital position because we brought on a new business area, servicing trusts, and some has gone in dividends. And so the dividends have gone into our account and add to the value of the fund. The debt repayment obviously comes back and helps our cash position, but doesn't add to the value of the fund. The interest we receive comes back to the fund and adds to our returns. And what should happen over the next year with that business, because it continues to go well, is we want to see that debt paid down to around 1.2, 1.3 million, which probably will take another year. And then after that, there'll be further cash flow, which can come back to us in dividends. So for FY27, there should be a big uptick in the actual earnings from that business. Um, and we'll also at that stage have 1.2, 1.3 million in debt to a company that carries around 1.3, 1.5 million in very secure working capital. The working capital mostly constitutes cash and receivables from very large financial institutions. There's no bad debts in the business. And so you're lending at that stage 1.2 million to a company that is basically almost net debt free. If you include those receivables, we'll be earning around 11% yield on really what is very, very secure uh, debt. And so that continues to track how I would like it. Um, the only other question on valuation there is, as I think I mentioned last time, we will look when I get the actual audited accounts in late July, August, whether that should be revalued on our books. I would say it's on there at a very conservative valuation at the moment. Against that, it's only had 1 year of profit. I'd just like to see it bed in for a bit longer before we go nuts on any valuation increases, but we'll certainly consider that this year. The other one that might be a new name to people there is Red Whale. So Red Whale, I actually mentioned this briefly, and the owner was there at our last end of year function in December 2023. It's taken a long while to get this thing to fruition. So I've sort of undertaken a long time ago not to undertake any new unlisted positions, and that's been the case. Red Whale well, it wasn't an exception. It's just that Red Whale was a position we'd already undertaken to invest in way back in 2023. It's only been in the last 6 months that we've actually finalised that investment. I will be doing a write-up on that business. You can have a look at the website yourself, but it's basically what it says on the packet, a swim school operation in Switzerland. There's various reasons which I'll explain as to why we are there. It's an Australian person who I've known from well back, who I reacquainted myself with a few years ago while in Switzerland. He's an Australian who has been living in France and Switzerland for 20 years. And he and his wife, who is very talented, as is he, set up a swim school at a point 7 or 8 years ago when they couldn't find any suitable Australian style, American style warm water swim schools for their kids. There was really nothing on offer. That went through various iterations, got through COVID, which is obviously an issue, became very successful in their rented pools. And a while back, they managed to get a loan from UBS and raise some money from parents and others to build a really high spec 6 million franc, which is about 10 million Australian pool in Geneva. That has been a great success, and I've been tracking the financials of that from before it was built right through to now when it's about 18 months old. We've come in with a debt and equity position with that company, which is allowing with further UBS financing, allowing the building of 2 new pools, another pool in Geneva and one in Lausanne. And we've also started, or he started, and we're helping to finance a process of taking positions in various UK swim schools, and he has a UK operator there. So requires a lot more explanation. My September, so August, I'll probably do more of a general discussion like this in Q&A. In September, we'll hear from the CEO of Allmain. And October, I haven't teed this up with Michael yet, but Michael, the founder and CEO of Red Whale, will speak to us, hopefully, if not October, then that's certainly November, and run through the history of that business, where it's going. And I think most people that hear that story and see it will be quite excited by it. Certainly something that can't be killed by AI. It's it's had incredible demand, which I've verified through various means. I've been consistently impressed with Michael under promising and overperforming in terms of the metrics of the pools that he's built. Um, and that's a really core long-term holding for us along with AFL. Um, they're two businesses that I see being really much bigger and very attractive to private equity in 5 to 10 years. So the only other thing that was on the horizon is you'll see there's a couple of property trusts there, which we've invested in through Arcana, who I rate really highly as unlisted property syndicators. Those two large positions are going really well. We've got two small positions that don't quite make the list there. One of those small positions was actually sold, was under contract at quite a premium to the value that we paid for it and on which I have on the books. And that should process later this month or August as well. And we'll get a small uptick there, which will probably contribute around 0.5% to the fund by itself. In terms of July so far, look, we're going well, touch wood. We'd be up more than 1% so far in July, very early days, but uh, it's been a reasonably bullish start. A couple of the small funds that we're invested in, I know are doing very well so far this month. By that, I mean some of the real microcap focused. Again, it doesn't make the list there, but Merriweather, um, run by Luke, is doing really well this month. Luke Winchester, he has a real focus on the mega's a terrible word, the real hard microcap end of the spectrum, even more so than myself. And um, he's had probably a tough run of it the last year or two. But he's previously shown that when microcaps do run, maybe this is a false dawn, but when they do run, he can really put big runs on the boards. And so, yeah, there's good signs there. So that's the focus. I'll just have a look at the Q&A and see what has come up, if any. Shares with KME. So you'll see on the he's asking about our position on KME. I'm not sure you can, if you can't see on the screen that it's on the Westferry website, you'll see Kit McGrath there is listed as a 3.1% position. I've actually sold a little bit since then, taken some profits, although it has still gone up, so it's probably still a 3% position. Um, yeah, and look, yeah, absolutely, it's an AI risk. As I say, I've started to take some profits because it's moved towards, we invested in the low 40s. It's now 57. Yeah, look, I've done a lot on this in terms of working out the AI threat. Definitely is a potential threat, but I've spoken to some franchisees and some parents. I, most parents, their rationale for sending kids to these type of businesses are not immediately satisfied by AI. I mean, the parents with the kids that they're trying to help in these situations, A, are looking for a good program or a good testing method, which AI can provide, but they really are looking for someone to make sure their child is doing something really to oversee them in situations where they may not be able to because of time or ability, um, and get feedback that they actually trust. And I think that's likely to come from a person rather than some sort of AI feedback. Um, that may be wrong. I mean, I just think that there's still a long runway for these type of businesses. Um, Certainly enough for us to take advantage of that very, very low valuation and the cash flow that's coming in. But yes, that's why it's not a 10% position. Um, and that's the only Q&A we've got for today so far. Well, I think, sorry, David Walsh asked a question last time, which I didn't quite get to, which I'll raise now. And that's what are you seeing, hearing in terms of capital flows through the very small cap markets, any pickup in bids, take privates, capital raisings, etc. Um, it's probably the worst it's been over the last year in terms of non-mining microcap. There's been a real move from very large funds, super funds, away from the microcap space. A lot of funds that have much higher cost bases than I do. We run Westferry off an extremely low cost base, and so I'm not particularly here to grow farm. It doesn't, concern me too much. There's a core group of investors with Westferry that make up more than 50% of the total investment. So I know that I've got good long-term capital there. So we don't face those sort of liquidity problems. We're not here to grow a funds management business. But I do know that a lot of, funds management businesses that have high cost city offices, number of staff, um, are really struggling to attract the farm that they need in the microcap space. This month, probably actually the last 3 or 4 weeks has been a bit of a turnaround in mood. It does tend to be at this time each year. I think it was on the Coffee Microcaps website recently, where a graph was published showing for the emerging markets index, sorry, not emerging markets, but the microcap index or whatever the most equivalent to that is, um, set out the sort of average monthly gains, and July is for some reason by far the biggest performer for microcaps generally. So it might just be a seasonal thing that we're seeing, as we often do. Something I've noticed too previously. It's perhaps a result of people tax loss selling into June and then some pressure relief from that. But yeah, certainly flows are an issue. They're affected by many things. Partly mega cap stocks have performed really well and money tends to flow to where things have gone well recently. Secondly, the regulators brought in about 18 months ago a really harsh requirement on large super funds to perform in a way that doesn't deviate too negatively, at least, doesn't deviate negatively from the average performance of other super funds. And that's caused a real concern by fund managers of those super funds to ensure that they don't go into areas that are too different, frankly. So you'll see, the penalties for that are, 2 years of underperformance against your peers, and you are forced to, as I think BT funds were last year, forced to write to all of your uh, account holders, basically saying that you're garbage and that you're forcibly recommending that they go to another fund. And so it terrifies people in those large super funds. Um, we saw when that was brought in, another fund manager, um, EGP Capital, and Tony Hansen was trying to put together essentially a microcap fund of funds, which he was going to market to large capital allocators, to the mega super funds, Australian Super, etc. That was a long way down the road. It would have been a really different and interesting product. It would have basically allowed large flows into microcap because it would have then be spread or spread efficiently amongst a large amount of managers. But it would have been a different sort of product that may have differed greatly from year to year to the index results of the larger indices. And as soon as the government brought in this requirement to stay within various bands compared to your peers, that project just fell over. Um, and so you know there's definitely a move to flows into larger holdings. Uh, I think it's creating really great value in my space. Does that mean that that's going to be realized anytime soon? Possibly not, but over the long term, medium term, even, I think these things generally find their way back in a cyclical sense, and so we'll benefit from that. And Westferry's set up so that we're not going to collapse because we don't have a certain fund, we can't pay our staff. We are rock solid in terms of liquidity and the ability to keep going until that comes. And yeah, this year so far is off to a decent start. So look, thanks very much for that. Have a read of the that list that's now on the website, and give me a call if you want to discuss any of those different positions and what they entail in more detail. We'll be back in August with the July update. Thanks very much. See you.